Hi everyone, this is Victor here. In this video, I'm going to analyze Walmart stock to see if it's one of the best inflation-proof stocks for long-term investing. Before I start, I'll give you some context first. At the time of making this video, the US inflation rate is at a 40-year high. The Russia-Ukraine crisis is still ongoing. Many companies are still experiencing supply chain issues. Oil prices are still above $100 a barrel. The US Fed is planning to raise interest rates aggressively to fight inflation going forward. The US Fed's aggressive monetary policy tightening may eventually lead the US to a recession. In this video, I will analyze Walmart stock to see if it's a great business that is inflation-proof and recession-proof. You will learn about these topics: Walmart's business overview and revenue guidance, Walmart's economic moat and long-term prospects, Walmart's main competitors and risk, Walmart stock valuation, and will I buy Walmart stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we will be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos a week that will help you become a great investor. The link is in the video description. Take a look. Let's start. As you may already know, Walmart is the largest retailer by sales in the world. According to this here, Walmart's annual revenue is even larger than Amazon, Apple, PetroChina, and Berkshire Hathaway. Walmart has more than 10,500 stores under 46 banners in 24 countries. Walmart's stores are mainly in the US, Africa, Canada, Central America, Chile, China, India, and Mexico. In recent years, Walmart sold its operations in Argentina in fiscal 2021 and sold its operations in the United Kingdom and Japan in fiscal 2022. Walmart is always looking for markets that have higher growth rates and higher returns on capital. Walmart decided to exit Argentina, UK, and Japan because these markets had very low growth rates and low returns on capital. Walmart has many store formats, including neighborhood stores that are much smaller and that are tailored to the local markets, discount stores, and supercenters. In addition to Walmart's local stores, discount stores, and supercenters, Walmart has e-commerce websites in the US and in the international market. Walmart customers can buy things online, have the products shipped to their homes, or pick up their products at the nearest Walmart or Sam's Club stores. Walmart is also the majority owner of Flipkart, an e-commerce company in India. Walmart has 3 business segments: Walmart US, Walmart International, and Sam's Club. Walmart earns the most revenues and operating income from the US market. For example, in fiscal 2022, Walmart US contributed 69% of total revenues and around 83% of total operating income. In comparison, Walmart International contributed 18% of total revenues and Sam's Club contributed 13% of total revenues. This means Walmart US is still the most important and most profitable market for Walmart. Here is the interesting part. Walmart has been competing with Amazon in e-commerce for years, but Walmart still earns more than 99% of its total revenues from merchandise sales in stores. Less than 1% of total sales came from e-commerce in Walmart US, Walmart International, and Sam's Club. Another interesting part is this: Walmart's membership-only Sam's Club competes directly with Costco's membership-only wholesale stores. As I mentioned earlier, Sam's Club's net sales are much smaller than Walmart US and Walmart International, but Sam's Club is growing much faster than Walmart US and Walmart International. For example, in fiscal 2022, Sam's Club's net sales grew 15.1% year over year. In comparison, Walmart US sales grew 6.3% year over year, and Walmart International's net sales declined 16.8% year over year. Walmart International's net sales declined in fiscal 2022 mainly because Walmart sold its operations in the UK and Japan in fiscal 2022. If you're a long-term investor, you will want to know how profitable is Walmart, what is Walmart's long-term growth rate, Walmart's cash flows, Walmart's dividend yield, and Walmart's revenue guidance going forward. Like most retailers that sell grocery, general merchandise, health and wellness products, Walmart sells large volumes of merchandise each year, but its products tend to have low gross profits, which results in lower operating income. For example, in fiscal 2022, Walmart's gross margin was 24.4% and its operating margin was 4.6%. In terms of long-term growth, Walmart's revenue growth has been growing consistently in the past 10 years. According to seeking alpha. Walmart's revenue grew at a compound annual growth rate CAGR of 3.34% in the past 5 years and a CAGR of 2.52% in the past 10 years. During this period, Walmart's operating income actually declined. Walmart's operating income decreased at a CAGR of 0.21% in the past 10 years. In terms of cash flows, Walmart's operating cash flow did not grow in the past 10 years. Its free cash flow actually declined in the past 10 years. You may wonder how come Walmart stock still grew 136% in the past 10 years. In comparison, the S&P 500 grew 296% during the same period, outperforming Walmart by a large margin. I believe there are several main reasons. First, as I mentioned earlier, Walmart's total revenue did grow consistently at a compound annual growth rate CAGR of 2.52% each year in the past 10 years. Second, Walmart has been returning most of its free cash flow to shareholders every year by paying dividends, increasing dividends every year, and buying back a large number of shares every year. For example, at the time of making this video, Walmart's forward dividend yield is at 1.56%. Walmart recently raised its annual dividend and has been increasing its dividends to shareholders consistently for 49 years. And third, Walmart has been buying back more shares every year. This is why you can see Walmart's diluted shares outstanding has been decreasing consistently in the past 10 years. Whenever Walmart buys back shares, it reduces the number of shares outstanding. This increases Walmart's intrinsic value per share, even if Walmart's revenue, operating income, and free cash flow stay flat over the next 10 years. Since Walmart is already a very mature company and has very low growth rates, Walmart has to return most of its free cash flows to shareholders through dividends and share buybacks. For example, last year in fiscal 2022, Walmart had an operating cash flow of $24.2 billion and a free cash flow of $11.1 billion. Walmart returned $15.9 billion to shareholders through dividends and share buybacks. Obviously, Walmart's $11.1 billion free cash flow was not enough to pay for $15.9 billion of dividends and share buybacks. So Walmart had to decrease its cash on its balance sheet by $4.8 billion in order to return more capital to shareholders. In terms of revenue guidance, in fiscal 2023, management expects that Walmart's total net sales will grow 3% year over year. Operating income will grow 3% year over year. Earnings per share (EPS) will grow mid-single digits, and capital expenditures (CAPEX) will be the upper end of 2.5% and 3% of net sales. The 3% revenue guidance is very close to Walmart's 10-year revenue CAGR of 2.52%. When we're investing in stocks, we have to be forward-looking instead of backward-looking. So let's analyze Walmart's competitive advantage and long-term prospects. So what is Walmart's biggest competitive advantage? Walmart's biggest competitive advantage is price leadership. Walmart calls its price leadership strategy everyday low prices and everyday low cost. This is from the most recent annual report. It explains Walmart's biggest competitive advantage, price leadership. Price leadership, which has been and will remain a cornerstone of our business, as well as increasing convenience to save our customers time. By leading on price, we earn the trust of our customers every day by providing a broad assortment of quality merchandise and services at everyday low prices, or EDLP. EDLP is our pricing philosophy under which we price items at a low price every day, so our customers trust that our prices will not change under frequent promotional activity. Everyday low cost is our commitment to control expenses, so our cost savings can be passed along to our customers. This is the important part that explains how Walmart achieves price leadership and can offer products cheaper than most competitors. We offer our suppliers the opportunity to efficiently sell significant quantities of their products to us. These relationships enable us to obtain pricing that reflects the volume, certainty, and cost effectiveness these arrangements provide to such suppliers, which in turn enables us to provide low prices to our customers. I talked about this earlier. Walmart earns the largest annual revenue in the world, even larger than Amazon, Apple, PetroChina, and Berkshire Hathaway. Walmart earns most of its revenues from selling merchandise in stores, such as grocery, general merchandise, and health products. Walmart achieves price leadership and offers low prices than most competitors because Walmart buys much larger volumes from suppliers than other competitors. In return, suppliers can often give Walmart the highest volume discounts. This allows Walmart to have lower merchandise costs, known as cost of goods sold, than most competitors. This allows Walmart to offer everyday low prices to customers instead of relying on frequent discounts like other retailers. Because Walmart often buys the most volumes from suppliers, it's nearly impossible for other competitors to compete with Walmart to have lower prices every day. This is why many customers who are more price sensitive like to shop at Walmart and Sam's Club. Right now, we're in a high inflation environment. The US inflation is at a 40-year high. Grocery prices are increasing quickly. This actually benefits Walmart because many customers will want to shop more at Walmart going forward. In my opinion, I believe Walmart's business is almost inflation-proof because Walmart earns a large amount of revenue from grocery sales every quarter. Even when inflation is high, everyone still needs to eat and buy the groceries at the closest grocery stores, discount stores, and supercenters such as Walmart. This is from the most recent Q4 earnings call. Management believes the current high inflation is an advantage to Walmart. Management said Walmart US customer looks like the US population, and it does to a really large degree, and so will service everybody. And during periods of inflation like this, middle-income families, lower middle-income families, and even wealthier families become more price sensitive, and that's to our advantage. So we have been through this before, and we run with inflation around the world all the time. Inflation is a different environment in the US right now than it has been in recent times for sure. But we have been dealing with inflation in South America and Mexico and other places, and just kind of understand what that looks like. Walmart is a very mature business. Walmart has a very low revenue growth rate. Going forward, I believe Walmart's revenue growth rate will be very close to or slightly higher than the US long-term GDP growth rate. According to the Conference Board economic forecast for the US economy, annual growth in 2022 should come in at 3% year-over-year. Looking further ahead, we forecast that the US economy will grow by 2.3% year-over-year in 2023. In light of Russia's invasion of Ukraine, we're downgrading our 2022 and 2023 growth expectations and increasing our inflation forecast. Walmart's management expects that the company's net sales will grow 3% year-over-year in fiscal 2023, excluding Walmart's sales of UK and Japan operations. Management expects that Walmart's net sales will grow 4% year-over-year in fiscal 2023. Here's the important part you want to know. Management is working to increase Walmart's revenue growth to 4% each year. Management intends to achieve 4% revenue growth each year by expanding Walmart's e-commerce business, third-party marketplace business, advertising business, fast delivery services, grocery delivery, and international markets such as China, Mexico, Central America, and India that have higher growth rates. In terms of risk, I believe Walmart's first main risk is competition. Walmart's two biggest competitors are Amazon and Costco. This is from the most recent annual report. Walmart US competes with brick-and-mortar, e-commerce, and omnichannel retailers, operating discount department, retail and wholesale grocers, drug, dollar, variety and specialty stores, supermarkets, hypermarkets, and supercenter type stores, e-commerce retailers, as well as companies that offer services in digital advertising, fulfillment and delivery services, health and wellness, and financial services. In addition, for e-commerce and other internet-based business, newer or smaller businesses may be better able to innovate and compete with us. Walmart competes directly with Amazon in first-party e-commerce, third-party marketplace, and fast delivery services such as same-day grocery delivery services. Going forward, one of Walmart's growth catalysts is expanding its e-commerce business. In North America, most people still make purchases online using Amazon first, instead of Walmart or other retailers and marketplaces. This is because Amazon usually has the largest product selections online, very fast same-day or next-day delivery, and great customer service. Even if Walmart has cheaper products, many people still use Amazon to make purchases online because of how convenient it is to use Amazon, especially if the customers are Amazon Prime members. At the time of making this video, Amazon is still far ahead of Walmart in e-commerce, fulfillment networks, and delivery services. Walmart also competes with Costco, Kroger, Target, and thousands of local grocery stores, discount stores, wholesale stores, and supercenters around the world. Walmart's Sam's Club competes directly with Costco. Costco is the market leader in membership-only wholesale stores in North America. At the time of making this video, Costco is still far ahead of Sam's Club in sales, warehouses, and club members. Similar to all other retailers, Walmart also faces high inflation and supply chain issues. For example, in the recent Q4 quarter, Walmart's management said supply chain costs were over $400 million higher than expected. If the current high inflation and supply chain issues continue longer than expected, Walmart will have higher merchandise costs, higher shipping and transportation costs, higher labor costs, and higher capital expenditures. All these higher costs will lead to lower gross margin, lower operating income, and lower free cash flow for Walmart. When it comes to investing, I believe it's important to calculate the intrinsic value of the business first and never overpay the stock. I always use this intrinsic value calculator here to calculate a stock's intrinsic value. If you want this calculator, you can download it in my Patreon blog in the video description. These are the key assumptions. First, I define Walmart's intrinsic value as its future cash flows discounted to the present day. The discount rate is 7.4%. This is slightly higher than the 6.5% cost of equity from Finbox.com. If you want to be more conservative, you can use a higher discount rate here. I'm using a higher discount rate to account for higher inflation. Walmart's most recent 12 months of total revenues are $573 billion. Here's the important part. Based on the long-term prospects and management's revenue guidance I talked about earlier, I expect Walmart's total revenues will grow at a compound annual growth rate CAGR between 2.5% and 4% over the next 10 years. In my opinion, I believe Walmart's revenue growth will be very close to or slightly higher than the US long-term GDP growth rate. Walmart's free cash flow does fluctuate every year depending on Walmart's operating cash flow and its capital expenditure. In the past 10 years, Walmart's average free cash flow as a percentage of total revenues was 3.22%. I'm assuming Walmart's average free cash flow as a percentage of total revenues will stay the same at around 3.22% over the next 10 years. To calculate the terminal value at the end of year 10, we're using both the perpetual growth model and the exit multiple model here. Then we take the average of both models to calculate the terminal value. Let's go over these three case scenarios: the worst case, the normal case, and the best case scenarios. Under the worst case scenario, we're using a revenue compound annual growth rate CAGR of 2.5% over the next 10 years. If we forecast Walmart's free cash flow to the next 10 years and discount the free cash flow to the present day, Walmart's intrinsic value should be around $363 billion for the entire company, or $131 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're using a revenue compound annual growth rate CAGR of 3.25% over the next 10 years. If we forecast Walmart's free cash flow to the next 10 years and discount the free cash flow to the present day, Walmart's intrinsic value should be around $385 billion for the entire company, or $138 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're using a revenue compound annual growth rate CAGR of 4% over the next 10 years. If we forecast Walmart's free cash flow to the next 10 years and discount the free cash flow to the present day, Walmart's intrinsic value should be around $409 billion for the entire company, or $147 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Walmart's intrinsic value should be around $138.6 per share. This means I believe Walmart is overvalued at the time of making this video. Just to compare, Morningstar estimated Walmart's fair value to be higher at $145 per share. So will I buy Walmart stock? The answer, it depends on what type of investor I am. Personally, I am mainly a growth investor, so I will not buy Walmart stock. I don't have Walmart stock in my portfolio. I have Amazon and Costco stocks in my growth stock portfolio instead. I'm not buying Walmart stock because the company does not have higher growth rates. However, if I'm a dividend investor, I would consider buying Walmart stock for the long term and buying it when it's undervalued, because Walmart has been increasing its dividends consistently for 49 years. More importantly, Walmart has a very large economic moat known as price leadership. Most competitors cannot compete with Walmart's everyday low prices. Based on my estimates, I believe Walmart stock's intrinsic value is around $138.6 per share. If you want the latest intrinsic value update based on the latest earnings, you can download it in my Patreon blog in the video description. Now, all these estimates are only my opinions and my analysis based on my research. They are not financial advice. There are always risks associated with investing. It's important to always invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting the channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.